Hey guys, welcome back to the Max Spence Business Podcast. Today I have a very special guest. But before I jump into that, if you guys like the podcast, please like, subscribe, leave a review. It helps out a ton with the podcast and also the people that are coming on the show. If you can go over to Apple Podcasts and leave a review, that helps out a ton as well. So without further ado, today's guest is Michael. So he's the principal at SPI Advisory and he runs the Dallas, Texas office. SPI Advisory specializes in repositioning multifamily assets. Michael has built a real estate portfolio over $1 billion and is the host of the Multifamily Investing Show with Michael and the host of the Old Capital podcast. It's great having you on the show.
Hey, thanks for having me on. I appreciate it.
Awesome. So just for people that maybe don't know who you are and aren't familiar with what you do, why don't we jump into a little bit of intro about your backstory and how you sort of got into real estate?
Yeah, Max, I appreciate you having me on. And as you mentioned, I'm a real estate professional. I focus on multifamily investment properties. I've been doing that for, I guess, eight or 9 years now. But kind of prior to that, I grew up in the Dallas-Fort Worth area, kind of middle class, nothing special. My dad fixed appliances for a living. My mother was a school secretary. So certainly didn't come from a bunch of money. And so I kind of went to college. Ended up getting a finance degree from a local university here in the Dallas area and went into banking, kind of worked in the front part of the bank when I was going through college, kind of worked my way through college and got into the credit department of a regional bank right out of college and then progressed into the lending role. And our bank really focused on commercial real estate lending. That's kind of really the department I was in. So I kind of my professional career really was just loaning on all the various income producing asset classes. So office, industrial, retail, and then the last, say, 5 years of my banking career. So I ended up doing just kind of specialized in multifamily lending, and kind of right in the middle of that was the Great Recession too. So had a couple years of problem loan workout experience where all those loans were making an 05, 06 that couldn't go bad. All of a sudden one day they did, and then we had to kind of work all that out. And then kind of coming out of the Great Recession while I was still working at the bank, I realized I was kind of on the wrong side of all these deals. It was kind of better to be the borrower than the lender. And so I went out in 2011, I bought my first single family house. So started with just a 3-bed, 2-bath house in suburban Dallas. I think I paid $75,000 or $80,000 for it, something like that. Put about $10,000 in work into it and rented it out for, I think, $1,100 a month. And that's kind of my start, was this tiny little house in suburban Dallas, and then ended up doing 16 rent houses. And that that was great and made a bunch of money, but it wasn't very scalable. So reflected back to what I did all day, every day at work, which was loaning on multifamily properties. I had a lot of information, a lot of knowledge, a lot of connections, but I didn't really, wasn't utilizing what I had at my disposal. So I transitioned out, and I kind of through the bank, I met my now business partner, Sean. He's working for a broker out of Los Angeles that would help people buy properties in Texas. And I made a loan to one of their clients. That's kind of how we met. So we went out on our own 2013. The first apartment deal we bought was a 120 unit deal called Bay Island Apartments in Garland, Texas, like suburban Dallas. It was like a C-class deal, kind of built in the mid 1970s. I think we paid about $3.8 or $3.9 million for it. So high 20s, low 30s a unit. And we sold that about 2.5 or so years later for $6.5 million. And, like you said, we've done about 10,000 units now, about 6,000 a day, about $1 billion worth of real estate. So that's kind of the last decade or so of my life has been kind of transitioning in the multifamily space. And as you mentioned, I'm the host of a show called the Multifamily Investing Show with Michael Becker. It's on YouTube, iTunes, probably anywhere you hear my voice right now, or our website's www.multifamilyinvestingshow.com. So appreciate if you guys give it a like and subscribe and watch that episode or two.
Yeah, guys, I highly recommend that you go check out Michael's show. Really high quality, really high caliber guests that he has on the show, and it's really well made. So I highly recommend to go subscribe, and you'll learn a ton of stuff from it. But now jumping to, that's absolutely crazy. So you got 16 properties, and then jumping to 120 properties, and then jumping from 120 properties to 10,000 properties. Yeah. And people are probably like, I'm a younger guy, and the majority of my audience is younger. majority of them are probably sitting here like, how did this guy do it? Like, how did you do that?
Sure.
Right? Like, how is that like $1 billion in real estate sounds absolutely crazy, right?
Yeah, it
So
does, right?
yeah.
Yeah, I kind of wake up and realize that man, we've done a lot in a relatively short period of time. So, I'm in my early 40s now, and I didn't buy my first property, I guess, until I was like 33, I think, 33, 32 when I bought our first rent house, and I bought my first apartment about 35. And before we start recording, you're talking about a guy that we kind of mutually both know that is in his earlier mid 20s. And he's kind of partnered up with an older guy, and he's doing some deals. So, I think age is obviously, age and experience help and money helps. But it's not, everything. So kind of what I did is I went to school and I wasn't the best student. Kind of what I didn't say is I was in college for like 8 years. I was kind of the 8-year program. I kind of worked during the day and went to school at night for a big chunk of that. But really, a lot of that was me just not being focused when I was younger. I didn't really like school, I didn't see the benefit of school so much. But I kind of felt like I had to go to college or go to university. And so, kind of the joke I like to say, I was there for 8 years. So I kind of beat Tommy Boy by 1 year. I was there, and then eventually, kind of towards the end, figured I don't want to be the guy that goes to school for 6 or 7 years and doesn't graduate. So like I got to graduate. So I finally buckled down and got out, and really, working for the bank was one of the best things I did, was kind of getting the credit department and really just kind of learning how money works. Because, they teach you all this stuff in school, but it's not the real world on how these deals kind of are put together and get done. So I got to see deal after deal after deal in a real world environment. I learned a bunch, and then I got to get on the production side, and then you had to then negotiate with a lot of your clients, your borrowers, on how do you put these deals together. So not just understanding the math behind it, but actually kind of the real world implications and implementation of it from a banker's standpoint. And if you think back, when you're doing a commercial real estate deal, usually 70 to 75% of the money is from your loan, and 20 or 20 to 30%, or give or take, is from equity. So that's a really large part of it. And then and through that process, I got to just get networked and meet a lot of the brokers and owners, and I started getting really good at being a banker. And a lot of the brokers are, was kind of control the majority of the multifamily deals. It's not like single family where you get like wholesalers, or you can put a bandit sign up or write a yellow letter. These large scale multifamily deals, the vast majority of them have a professional broker in between you, the buyer, and the seller. There's always, almost always a broker involved. So getting those relationships, I had a lot of those relationships simply by being a vendor, by being the banker. And if you think about it, like the broker doesn't get paid until the deal closes. The deal's not going to close until I fund my loan. So I was a pretty integral part. So what I needed to do was kind of transition my position in the marketplace from being a lender to being a principal of real estate, being a sponsor of real estate. And I found this pretty easy. All you do is do a deal, right? And then your perception changes overnight. And that's easier, kind of a flippant comment there. But how do you go from 0 to 1, which is kind of a mindset thing. It's really, really hard to go from 0 to 1, but going
Yeah,
from 1 to 2
actually,
is a lot easier.
sorry to cut you off there. Like, yeah,
Yeah.
talking about mindset is like, when I'm like going back to like, you had 8, like what happened with your mindset? You spent 8 years in college, and then, the majority of people will be like, oh, that was a really long time to be in college or something. And it's like, why didn't you complete it in 4 years? But then, you turning it like around, and now you're like, now you have $1 billion worth of real estate. It's like,
Yeah.
it's like crazy. Like, and what I'm trying to understand is like that mental shift, like, and when did that happen, and what caused
Sure.
it, that you said, okay, I'm going to focus and I'm going to dedicate myself to like whatever you were doing. And you
Sure.
sort of turn, like you sort of flipped it, and now you're very successful. And I find that really, really interesting. And I think some of my viewers would find that really
Yeah.
interesting, because they might be in a place right now where, they might be struggling or something of that nature. And so, yeah, like to talk on that
Yeah.
mindset, like what happened, and how did you sort of change your mindset?
So I was always a guy that worked hard, right? When I was growing up, had, mowed yards and stuff like that. Then I got my first job at 15, and, my dad fixed appliances for a living. So I'd see him, work 12, 10, 12-hour days a lot, work on the weekends, kind of do side jobs and earn money. So, working hard was instilled in me as a young age. But just because I had a good work ethic didn't necessarily mean that I, was doing the right activities or doing the right things. So, I worked through school. So I always, I held a full-time job for the majority of my college. And eventually I just got out. And I don't know if college actually benefited me, short of it gave me a little bit of credibility to get my first job. And then from there, no one asked you, anything about college, at least not my experience. And then it kind of gave me a little bit of a chip on my shoulders, especially as I kind of got into the bank and started kind of progressing. I worked for a regional bank, and then Wells Fargo bought my bank in 2008. So then I get thrust into a large financial institution, employees, over 200,000 employees in the United States at the time I worked there. So I'm sure it's bigger now. And, then I kind of looked at like some of the other guys that did what I did for a living. A lot of them had their MBAs and had a better school. And I was out there just like, I'm just going to work these guys. And I was smart and focused, where these guys were, their attention was diverted, right? So like the bank, they wanted us to sell, like we got measured on 4 different kind of products. You had to make loans, get deposits, like other services, like credit card services or treasury management services. And they would just kind of measure you on kind of units sold. So whether you sold a checking account or a loan, it counted as a unit. And I kind of looked at what they were going to pay me on. And I realized I made more money on doing loans and I didn't make much money on the other stuff. So I was like, screw this, I'm just going to do loans. And I kind of got my little niche, and I was like, I'm just going to focus on multifamily lending. And I became an expert at this one thing. All these other guys had all these great degrees and pedigrees, they were doing a bunch of everything, but nothing really well. And I got really good at one thing. So I think that if anything, that's what I would probably encourage someone that's younger coming up, be an inch wide and a mile deep. Don't try to do everything. Get in a niche, specialize, become an expert in that field. Cause I have well more than my 10,000 hours in this one field. So you start talking to me about some other stuff, I'm probably not the most polished person or well-rounded person, but this one thing, I know everything about it, or almost everything about it. And then I got networked into the community, and then a lot of I'm sure you heard the saying that your net worth is your network, right? So that's very, very true in this business. One of the things I like to say, it's a completely unfair business. A lot of it's who what chips you can trade. The guy that's done 50 deals has a considerable advantage over the guy doing his first deal. And it's just kind of the way of the world. So they can try to socialize everything in this entire world, but this business is not that way. I don't see it ever really changing too much, because a lot of it's just relationships. And it's not like the stock market, where I got public information. This is, I get an access to a deal you never seen, I'm going to have an advantage. So that would be what I would say to some younger people, is just focus on one thing, get a niche, become a expert in that one, niche, and, just double, triple, quadruple down in that one thing. Just make sure it's something that, has enough profit margin in it that you can be successful. So, if you're focusing on the wrong industry and there's no money in it, then if that's an objective of yourself, you're probably chasing an industry that you can actually, do well in.
Oh, okay. So like from what I've got, like you've always been a very hard worker, but like later on is like when you sort of like you just didn't have, like when you were younger, you didn't have like any focus of where like you wanted to go with things. And then so like, was there like an aha moment when you're like, oh, this is like what I want to do, and this is like I understand, like I'm going to be able to be very successful in this, or what, or did it just sort of like or did it just sort of evolve and it was just sort of like what you went into?
So there's a couple of things that come to mind with that is, one, I was just kind of, when I was working full time going to college, I'd see people that had the same job as me as a 21-year-old kid, and they were like in their 40s, and we're kind of generally making the same amount of money, and maybe they made a little more than I did. I was like, man, I don't want to do that, right? So I kind of wanted to get and aspire to kind of come up and be a little bit more successful. And then, the other thing really was 2 things that really kind of crystallized from being, an employee. So I got to the right avenue in the credit department. I kind of took a step back, but I knew I was going to learn a lot about how business worked by getting in there. So that was really I was really intentional to go be an analyst for a bank, or, maybe if you're starting out, maybe go be an analyst for like a brokerage company that sells multifamily, and just get a lot of repetition that way. So that would be one piece of advice. And then the other thing really was, when I was at the bank, I was loaning money, I made a good living because I was a really high loan producer, and we get commission plus a good base salary. And I was always turning down like promotions because I didn't want to, look to my boss and his boss and his boss, and I didn't want to go down that path. But I would also observe all my clients, and, I'm making a good living, but these guys are getting rich. And there was like one example that just crystallized on my mind when there's a local investment club that used to do a lot of deals that I would make loans on. based in Houston. They're called Lifestyles Unlimited, and they're still around today. And one of the members was like, there was two guys buying a 30 or 40 unit apartment building, whatever it was. And one of the guys had some money, and the other guy was literally a bus driver. And so nothing wrong with being a bus driver, but this guy was literally drove a bus for a living. He had like $50,000 to his name. He's putting all his money in this deal. He had, bad credit. And here I am giving them $1 million+ loan to go buy this apartment building. And I was like, this guy kind of hit me in my face, Max. It was like, if this guy can do it, this guy, a bus driver, no financial background, no money, and then I can do this. I've been the good boy, saving my money. And so I saw that multiple different variations of that kind of same story. And that really kind of motivated me to go out and take action. And I was about 35 when I decided to leave the bank and go on my own, start a company, maybe 34, something like that. And just kind of felt like a fork in the road for me, and if you work for a company, every year you work for them, you get married, you have kids, you kind of get in your life. Every year you wait is that much harder because you get that much more responsibility, and then they tie you in stock options and things like that. So it was kind of like a fork in the road where it was like, I did all these little single family homes. I kind of built my confidence up, small project after small project. And so I felt confident that I understood the business by being a banker and loaning on this stuff. It was time for me to go take my action. And then if I failed, I can always go back and be a banker because I was a good banker. But if I didn't take that shot, I would just regret it the rest of my life.
Yeah, true. So did you quit did you just like quit right away and just went off into just jump straight into the deep end with starting this business, or did you slowly phase out? And what sorry, what would be your recommendations with that? Like, would you recommend to slowly phase out of like your job maybe, or like I know that might be difficult to do if you're working 5 days a week, or just save up and then just do the jump? Like what would be your...
I had the 16 houses under my belt. I owned the majority of those when I bought my first apartment, and then after I bought apartments, I sold basically all those kind of over time. So I had like independent revenue streams from these little rent houses. And then I ended up actually doing 4 deals while I was still employed at the bank. But I kind of made the decision like, hey, I'm going to phase myself out over the next year. And from that decision, probably took me 2, 3, 4 months to get the first deal done. And then from there, we did 4 deals in 6 months, closed the 4th deal, and I was out. So I kind of phased it in. I don't know if there's a right or wrong. My situation was I had a wife who wasn't working anymore, 2 kids, a mortgage, I had like responsibilities. So it was one thing from my perspective at that moment in time, being in my mid 30s versus maybe someone that's 25 years old, you don't have the same level of responsibilities, but it certainly takes less financial stress off you if you have a job and kind of phase it out. But it's distracting. You don't have to focus on it. And then it's easy if you're not have this burning desire like I did. It's easy to get complacent and say, oh, I'm not going to go spend that extra time or go to that event on the weekends or nights. I want to just sit at home and play Xbox and screw off with my buddies versus, sacrificing your weekend to go learn about this craft or network with whoever to kind of build that relationship. So it depends on kind of your personality and, do you have that self-drive and motivation that I have innate in me and willing to put in the extra work and the times and sacrifice for the greater good.
Oh, okay. And talking about that self-drive, was that always there, or did you have to build that?
No, I think I always had it. Really what I needed was kind of the confidence and, the confidence to go out and think I can actually go out and pull this off. And, I've kind of learned that through this process that you're never going to be comfortable when you do your first deal, right? I mean, even some deals we do now, I'm not comfortable with, fully, right? And we're mostly comfortable. And you got to just put yourself a little past your comfort zone, prove to yourself you could do it. And then the next deal you do, you push a little further, and it's kind of like incremental progress, or at least that's what's been with me. But I always had like a drive and a work ethic, and I wanted to be, successful in business and make some money and kind of grow professionally. And that's really, I guess in the back of my mind, I always knew I was going to be successful, and I had this drive, and I really wanted to go. I was willing to do what it took to go out there and get it. One of the things that for me was one of the things I had to really kind of overcome is I'm naturally a little bit more of an introvert. I'm not the most outgoing person in the world. So you put me in a room with 100 strangers and I don't, know anybody. I'm not the best at going out like, say, hey, I'm Michael Becker, nice to meet you, and starting like cold conversations with strangers. So what I've kind of found that worked better for me was I started becoming like an industry leader or a thought leader, started a podcast. Now it kind of evolved into this new show. I'd go get myself to speak at events, which was also very terrifying the first time you go to public speak. But I figured that it was easier to be on front of the stage for 30 minutes or whatever, speak. And then when I get off the stage, I go stand in the corner, and then I'm like a magnet. People come to me and they seek me out and have a conversation with me. Same thing with my show or the podcast. People reach out to me off of that, wanting to invest. And that's a lot more comfortable for me. So I just kind of decided I'm just going to bite the bullet and become, I'm not the best public speaker, but a competent public speaker on my one niche that I know a whole lot about. It make me give a public speech about something I don't know about, it'd probably be an absolute disaster. But that's what worked for me. So everyone's got to kind of think like, there's many ways to do this, but you got to kind of be just self-aware and just kind of understand what your personal limitations are, and then figure ways to compensate for that, whether that's, give yourself some training or some practice or whatever it is. Or, a lot of this is a team sport. If you do real estate like I do, a lot of businesses that. So if you get a partner and then your partner has different but complementary skill sets to you, that's a good way where you guys can do, more volume, and he focuses on his strengths and I focus on my strengths, and collectively we do a lot better than if I'm trying to do a bunch of stuff I'm not good at, and it takes me, I'm never going to be as good as him, and it's going to take me a lot longer to do it. I'm going to dread doing it and probably put it off. I found that that's also been very helpful as well.
Yeah, no, and that is great. That is a great piece of advice. Like you know yourself so well that you know what your weaknesses are, you know what your strengths are, you know how to pretty much effectively compensate for your weaknesses. So you're effective pretty much on the entire field, right? Which is like something I'm learning more about. And I can highly recommend that. It's one thing that you really want to understand is yourself, right? Like if you're not, like you're more of an introvert, like you were saying, is like, then it's probably not the best for you to be out trying to do, I don't know, like sales stuff or something like that. You want the extroverted guy who just loves talking with people nonstop, but he doesn't really like, like let's say the more analytical stuff, right? Yeah. So now I want to talk about is the catch-22 of getting into, like the 100+ real estate environment, right? And that's something I've sort of seen is there's a bit of a catch-22. And how do you overcome that, right? Because it's like, oh, I don't have like a 100-unit building, but you can't, like, it seems like there's a lot of like resistance between getting a 100-unit building because people, one, might not take you seriously, when you're trying to find a seller or you're talking with a broker, right? And all this sort of stuff. So how did you overcome that? Was that did you just put your head down and you're like, I'm going to get one of these properties, or like, how did you sort of do it?
So at the time, I leveraged what I had. So it was an easier environment in 2013 than it is today in certain respects, and it was much more difficult in other respects. So then there was a lot of, you were kind of just on the tail end of the Great Recession. The capital started flowing a little bit easier. The debt markets are sort of opening up a little bit, in 2010, 2011. Both those are really hard to get equity, and really hard to get debt. So it started kind of the early end of loosening up. So as a respect, a lot of the deals there weren't quite the demand for people bidding on these deals. So to get a deal was a little bit easier from that respect. Well, fast forward to today, there's world's awash with capital. There's money everywhere. The governments, central banks are printing, currency left and right. So it's a ton of asset inflation with the stock market and real estate and various things like that. Try to go buy a gold Rolex watch right now, it's almost impossible. There's money everywhere. But then there's, more and more people chasing deals. So it's harder to kind of get the attention of the broker, especially if you don't have a track record like you're talking about. So, I've seen several people kind of overcome this in different ways. First and foremost, I think you just got to be self-aware of kind of what you have. So do an assessment. I have X amount of money. I have this kind of credit, I have access to capital, I have relationships with kind of my service providers. And then, when you go to the brokerage community, usually the first thing you should do is kind of sign up on all the list of all the brokers, because it's not like an MLS. You got to get into their database, and then they'll start sending you the listed deals, because you're not going to see the off market deals being someone that's inexperienced. Going to save that for guys like me that have proven myself in the marketplace. So you get on their list, and then you need to communicate to the broker kind of like the truth. So, hey, I haven't done this before, but this is my team. So what the broker needs to convince to the seller, his job is twofold. One, the broker needs to, one, get the best economic terms for his client, the seller, when he goes on list. So, generally speaking, the highest price, stronger, earnest money, things like that. But two, or 1A really is kind of assessing the credibility of the buyer pool. And his job is not to get the deal into escrow. His deal is to close escrow and sell it. So if he picks the wrong buyer group, he's got to start all over again. So that's really what he does. What a successful broker does. He or she vets the pool. So they want to know, where's your money coming from. So where's your debt? Where's your equity? So you need to have the answer to that. So if you don't have it, can you partner with somebody that has it, right? So can you qualify for the mortgage? Because it's not like a single family house. The banks typically want someone that has some experience involved. If you get like the Fannie Mae or Freddie Mac financing, which is non-recourse, or sometimes the banks will loan to you if you sign recourse or personal guarantee on the loan. But if you don't have resources, they like to loan to rich guys. They don't like to loan to people without money. So you got to, likely find somebody that has some financial resources that you don't have. So you got to be able to be in an environment where you can form those relationships with people that have some money, have some experience, and you kind of leverage as a team together, kind of put your sponsorship team together. And then that's kind of what you present to the broker. That's what you present to the bank. You don't have it, but your partners have the money, and then you can do the sweat equity. And that's usually how these younger people break into the business. And so where do you find people like that? I mean, listening to podcasts like what you're listening to today, shows like mine, you get kind of some ideas and inspiration. But COVID, we're kind of coming out of COVID aside, I found that no one ever comes to my office or comes to my house and gives me money or a deal. I got to go out and get it. So you got to get out and get networked. You got to go to these local real estate investment clubs. A lot of people that have like minds, that's where they're at. So hopefully those will start kind of being in person again at some point in time. That's where a lot of those relationships can be formed. There's a lot of like mentorship programs out there. Most of them are probably crap. You got to kind of sift through some of that. And maybe that's a way you can shortcut a lot of this. Those aren't free. So you have to kind of pony up some cash if you want to get in there. So if you don't have the resources, you need to form on, getting educated if you're really young, maybe get a job at a bank or a broker shop like I did. Save, earn as much money as you can, live below your means, accumulate some capital, and then you can start putting that money out and put it to risk. Maybe you start in a single family house like I did. Maybe flip a couple houses, wholesale houses, whatever you have to do to kind of generate some liquidity and then transition up. So it's completely unfair. So if you have money and you have, connections, you're going to go quicker. If you don't have any money or connections, like when I grew up, I had to like work and save and kind of work my way up, and it was just a longer process for me, but I stuck with it and overcame it and own $1 billion of real estate now. So it's kind of, it's possible.
Yeah, no, 100%, and that's some great pieces of advice. Quickly, just two last questions before, because I know you gotta go. But so one question is, what would you recommend for, let's say, somebody who's in university or just coming out of university, and they want to get into the type of real estate you're talking about, the 100-unit multifamily real estate? What is the best path? Let's say like you went down the commercial lending route with going to work at a bank. Would you recommend doing that? Would you recommend trying to work for companies such as yourself, like you guys, as an analyst? What do you think would give the person the best the most amount of knowledge and sort of best bang for your buck? Well, but best
I
bang
think
for your
there's
time.
really three avenues that make most sense to me. Lending route, which is what I went, because you really get to understand the debt of the business. The problem with the lending route is most bankers are extremely conservative. So you're going to get around a bunch of guys that are kind of risk averse. So you might get that instilled in you along the way, which is great to be risk averse. But at some point, you got to take some risk if you want to buy a deal, and it's not a treasury bond. So you got to take some risk at some point, and there's no certainties in this business. The other way would be maybe working for a broker or multifamily broker, or office broker, whatever you want to specialize in, and then start their analyst program. And then maybe you can work your way up into like a junior broker, but you'll get to look at deal after deal after deal and see real-time market information on what these things are trading for, and kind of tour and walk them. That'd be a good avenue, or other avenue would work for like a private equity shop. I know a lot of people, like my firm, I guess we're kind of basically a private equity shop. Essentially, you raise money from other people and buy apartments, or you go work for more of like an institutionalized group that actually is bigger and has policies and procedures. And then you'll learn a lot that way as well. So I think those are 3 ways to get kind of paid to get an education as you work for somebody else. If you come from money, or you accumulated some money, or maybe a little bit older or a little bit further in your career, you have some money. I've seen a lot of people that are like engineers or salespeople or someone completely out of the business will join these mentoring clubs. And a lot of these clubs have, well-defined, established ecosystems where they have, vendors in there, a lot of other sponsors in there you can meet to maybe co-sponsor, and a lot of passive investors are kind of in that group. So if you could just pay to play, that's another avenue. I've seen people be successful, but usually those cost, tens of thousands of dollars to get into those programs. So if you're coming out of university, you don't have any money, it's probably not the avenue for you, unless your dad or your mom's rich, which was not the case for me coming out of school.
Okay. Awesome. Yeah, I like that a lot. Getting paid to get an education, which I think is absolutely amazing. So now, last question is to know a little bit more about you on sort of a deeper level. Like, what type of habits? Like, do you have like a morning routine? Like, all this sort of tough stuff people talk about. Like, do you have habits for success, or how do you sort of structure yourself to be very consistent and sort of very focused at achieving your goals?
Yeah, I wish I was better at stuff like that. I don't like to really read books. I don't have a morning routine. Probably should work out more than I do. So I don't really have kind of those little like life hacks. But I think what I really have is I have a burning desire and want to be successful. And, that drives me every single day. So I got this motor or engine inside me that's always running. So I have a really strong work ethic, and I will put the time in and do what I need to do. I've found I've matured enough in my life and had enough experiences where now I'm also I try to be very self-aware. So like when I'm doing some activities, I'm like, okay, is this like progressing towards my goals, or is this counterproductive? And I try to constantly cut out the bad stuff and focus on the good stuff. And I'll kind of leave it with this, really, if you're going to do what I do for a living, you're an apartment syndicator, you want to raise money and buy apartments. There's really, there's 1,000 things on my plate every day. We're in the middle of tax season. So I'm doing all these tax returns, issuing all these K1s. I'm, busy. I got a 6,000 or so units we own today that I got to stay on top of and asset manage the construction projects. Got all these employees, right? But, at the end of the day, to make money in this business, you got to do 2 things. You got to find money, and you got to find deals, right? So you got to find investors, you got to find good opportunities. Everything else is sort of noise, right? It's important. You got to stay on top of all this stuff, but the way you make money, the way you get paid, you got to find deals and find capital. So all this activity that is not focused on one of those 2 things is largely stuff I need to get off my plate onto someone else's plate and just kind of push it down. So keep the main thing, focus on those 2 things. At the end of the day, if I start going, and I'm not perfect at this, I'll start going in the rabbit hole, or I'll get stuck on Facebook or something and then start going like, shoot, I just burned 45 minutes of my life today. I'll kind of snap out of it and say, okay, what are the 2 main things I need to be focused on? And are the activities I'm spending here driving me towards that, or that's what I really need to focus on. So I'm constantly, I know kind of where my North Star is, and I'm always trying to go towards that, and I just kind of keep the main thing, and I think that's really worked well for me. I think if I was better about meditating and reading books and working out a little better in the morning, I'd probably even be better than I am. But at the end of the day, that's kind of the way I function and work.
All right. Awesome. Yeah. And that's awesome that I like how you do that, is like, like you pretty much, your self-awareness is like really high. So you understand, like, you look at everything as like, is this bringing me closer to, finding money or getting that deal done? Or is this taking it farther away? If it's taking it farther away, but it still needs to get done, it's either going to get systematized, or it's going to get thrown to somebody else on the team that will do it. I know we're coming to the end here. So where can people find out more about you? I know you mentioned your YouTube. Yeah. But what are the things?
I'll throw a couple of resources out. So really the best way, learning more about me is, the newest thing I have is kind of the show, which is the Multifamily Investing Show with Michael Becker. I know it's a real original name and everything, but it's on YouTube or iTunes or Stitcher, or our website is www.multifamilyinvestingshow.com. So multifamilyinvestingshow.com. That's a pretty highly produced show. As we talked about, I pay a studio, go to a studio in North Dallas, and I've been recording with some pretty high quality, high level guests, owners that own tens of thousands of units, brokers that sell billions of dollars of deals. These are all the people I kind of just know through my day-to-day life doing business. So if you're looking to kind of grow and scale and really it's kind of almost like there's a lot of shows out there that are kind of entry level for multifamily investing. This is kind of like graduate school. Is kind of how I'm thinking of it. The other show I've been a co-host of for many, many years is the Old Capital Real Estate Investing Podcast. I think we've been doing that about 6 years now. So to do that, my co-host Paul Peoples. You can find that on iTunes or Stitcher, or it's oldcapitalpodcast.com. Those are probably the two best ways to learn a little bit more about me and get a bunch of information. There's many, many, many hours out there of me droning on about multifamily investing and all the various aspects of it. So if you're an apartment nerd and you want to learn more about it, those are two pretty good resources for you.
Awesome. Yeah. Guys, if you made it to the end, thank you for listening all the way through. I highly recommend that you go check out Michael's stuff, on YouTube and also his podcast. He has tons of great information about it. And thank you again, Michael, for coming on the show.
Appreciate it, Max. Thanks for having me on.